Welcome to the Bantering Bosses podcast.
Oh, we're on?
We're on. We're
All
live.
right.
Episode 1 here. And yeah, we're excited. It's been a long time coming.
And thanks for joining us. This is our first try at this, so I know we're going to get better at it. And it is a little exciting. I agree with CJ here.
Definitely. And so we got some interesting topics, some topical topics to chat about, and some sports and stuff to go with. And I think Jerry's going to get us the quote of the day here.
The quote of the day is, deserve got nothing to do with it.
So we're starting, and I think the first thing that we have to chat about is
Clear the air.
Clear the air. How? First off, Jerry's the expert.
What does Philotimo mean?
I mean, we got to get a pronunciation check on this first before we even get into that. I think so.
In a simple way, Philotimo. So if you say it quickly, Philotimo.
Yeah.
It's basically a ancient Greek word.
Propaganda. Greek propaganda.
No, it's not really propaganda, but Greek word that basically phili means friend and timo means honor. So basically you combine those two and it means a lot to be honorable with the people you associate with. That's what Philotimo stands for. Anybody in that culture, in that universe, knows exactly what Philotimo is. It's been used many times by my parents telling me whenever I did something, don't you have any Philotimo on you regarding it? So CJ okayed it. He authorized it when he found out we had that person who
kind of helped us
out and determine, and he was pretty impressed by the word as well. So that's what we're going to go for.
And I think for me, I got on board with it because working with you for the past 8 years, that's really what we try we strive to achieve that with our clients. They're not just clients. We strive to be honorable friends and a little bit, more than just a client advisor relationship. And so we work. And
there is some responsibility with that word. When you mention that word, you'll learn it more and more as we go forward. You mention the word Philotimo, you deal with clients, it just means something there. It's one of those intangible.
We might shorten it to PWM, Philotimo Wealth Management, just for ease of pronunciation.
That's fine.
But no, it's been exciting to go through this process. We have the logos, and now we're starting with our
and
it
took us a year to get the website, to get everything going. So it is a little bit exciting that we're actually doing this. So.
Yes, and we've had the website for our website philotimowealth.ca for a few months
4
now,
months or something.
4 months.
Yeah.
And sharing some articles on Instagram, and all that stuff is linked below. So I think with the website, what we're hoping to do is to share some timely articles, things that we're finding are good reads and timely reads, because there's so much news out there nowadays. We don't want to add to the noise. We hope to cut through it and be providing good stuff that you can find value in.
And what better time to start your webpage and podcast at the most turbulent time that we've had in a while. So
it's been a little bit turbulent, yeah.
Yeah, so that part of it it's not funny, but it is. I find it neat that we're actually starting at a time where maybe people need some help and assistance in what's going on. Like CJ says, the noise, what is going on out there?
Well, and in today's day and age, when we're talking with clients, we have a lot of these conversations with clients on an individual basis. So this is a good way for maybe the clients we haven't gotten into, or the clients that we haven't spoken to more recently, you get an idea of, what our thoughts are on current events and things like that.
Yeah. And those clients that we have had a chance to actually speak to in person or Zoom are probably going to hear a lot of the same stuff that they heard in front of us. Mm-hmm. So to those people, thanks for listening, and thanks for joining us for another session, I guess. So
yeah, and overall, I think the idea with the podcast here is, not to get too in the weeds with stuff, but to keep it a little bit more informal. Like you see, we're going to be talking about Superbowl and some sports stuff, some of our interests. and not just about finance related topics. So I think it'll
And
find a good mix.
yeah, and I think that is the plan going forward. We want to find what's relevant at the time that the next
Mhm.
podcast is, and then also go off the board and talk about life, what's going on, what are you reading, what are you seeing, what restaurant did you go to?
Mhm.
Like, there's a million things going on that it'd be nice to pass on information and receive it as well. So
And that's for sure. I mean, hopefully, if this thing evolves, we want to hear what you guys want us to chat about, and hopefully it even sparks more conversations. If you hear us chatting about something, and you reach out to us, hopefully it'll spark some more conversations.
and that is a great point. Like, if somebody has a topic or something they would like,
Mhm.
like, we know RSP season's coming at the end of this
Yeah.
month. Taxes are coming. There's all kinds of stuff. Hearing from you and giving us a heads up of what you want to talk about, it'll be great. It'll give us some motivation to, feed more information out. So
Definitely. So, no time like the present. We might as well get started here. We are trying to keep it within 5 minutes. So, we have 5 topics, 5 minutes a topic. And the bell's going to go off and we're going to move on. So, the banter will certainly be there, but we're going to try to keep it clear and concise.
yeah, and banter, just so we're nice and clear here, doesn't mean we're going to be against each other or our thoughts or whatever. It just means we're going to voice back and forth of what we see is going on. And
we have a tendency to take different routes to potentially, no, most times the same answer, but different routes there. So it should be.
Yeah, CG just needs some help getting there. That's all.
That's-
But he'll be all right.
Yeah,
You'll understand.
All in due time.
You'll understand.
Everyone will see all about it here.
All right, here we go.
So there you go. So let's jump into the first topic here, inflation. And so our 5 minutes has begun. And I think, inflation has been a buzzword in the news cycles over the last 6 months or even a year. People have been talking about it, right?
Absolutely. And my brother gave me the best punchline. He goes, "What's it going on?" He went to buy 4 tomatoes and they were $1.25 each, the size of a tangerine. How can 4 tomatoes cost $5? I told him that's inflation. And he just looked at me and said, something's wrong here. So inflation is the hidden wedge that people, we live, but we just have to understand that cost of things goes up, and everybody knows that. You fill up your car with gas, you go to the grocery store, you go to buy a coffee. Is that what it costs? And you just shrug. But that's what inflation is.
Definitely, yeah. And I think if we have a quick chart here just to show you on that angle, the inflationary chart here. So this is U.S. Consumer Price Index, and just how it's fluctuated since back to the 70s. So you can see, back in Jerry's day.
The very good point. Jerry was around in the 80s.
Was that before the 70s? Okay, all right.
He remembers the 14% inflation that CJ was still not around at that time, but at least it's in the chart.
And what you're looking at here is the actual percentage change from year to year. That's on the left-hand side of the chart. So when Jerry referenced that 14%, we can see that number in 1980, right around that 15%. Now, the red line that you're looking at here is going to be inflation of everything. And then the blue line that you can see is a little less volatile. That's actually just the inflation numbers with the food and energy stripped out. So food and energy historically more volatile in terms of the price fluctuations there. So they strip that out when they're figuring out.
And that's what people see first, right? The first thing they notice is, what's this gas thing cost?
Like you said, the tomatoes.
How much the oranges cost?
Exactly,
That's the first things that they see. That's right.
Yeah, and so what we can see here too is that just in 2020, if we look on the right-hand side of that chart there, you see that spike there. So that's what we're talking about here. The last 6 months that inflation has dramatically spiked up year over year, partly to do with that 2020. Nobody went anywhere for a few months in early 2020. Got back in 2021 a little bit. And now we're looking at a larger spike here as hopefully we're getting closer.
And we have to also know that the Bank of Canada, their target inflation, what they keep telling us is that 1 to 3% range. It's been the same thing for a long, long time. US is kind of similar, but you can see from the chart that as we start to drift a little bit, we heard some numbers. I think it was a couple of weeks ago, 5.8, Canada 4 point, etc. So now that target number is hovering above. So everyone gets a little more anxious as to, hey, what's going on? What do we do? Of course, this is going to lead into interest rates and into other stuff we're going to talk about.
And I think the main thing here with the the main thing here with the inflation conversation is that it's not always bad. And so
No.
inflation is healthy in a good, healthy economy to have a bit of inflation. Now, if you have too much inflation, we worry about hyperinflation, but I think we're a little bit of a ways off from inflation or hyperinflation.
And historically, we've always been able to deal with some form of inflation. Deflation, the other way, we've never experienced that, and that becomes a whole different type of problem. So I do agree with CJ. It's not a catastrophe, but it has to be dealt with. And I think that's what the plan is here.
And there's been that we've all heard about the supply chain issues and the disruptions for ports and shipping and
no truckers,
productions
no
and
containers.
all of these things over the last 2 years with these COVID shutdowns and businesses having to shut down because of outbreaks and everything. So I mean, that I think definitely lends to higher inflation because the less supply.
How many signs have people seen labor wanted? Everywhere you look, that they're looking for people and they can't find people, and they're trying to increase wages. They're trying to do whatever they can, and that in tune by itself adds another component to the whole inflation problem that we're having.
I think as long as our clients and people have, if you're working, as long as your salary is going up as well, we're not in too much trouble. And if you're a retired client or you're a retired person out there
on fixed income,
you don't have a salary, so now you got to make sure that your portfolio is outpacing inflation, so that when you're looking at your portfolio and the cost of your necessities, you want to make sure your portfolio outpacing inflation, so you're not eroding your purchasing power. As you say, you have less your dollar goes not as far.
And it's hard to understand that you usually live it. You usually buy something, pay something, and then that's when it hits you. What the heck's going on? And I think that's what's happened to a lot of people right now. They know it's there, and how do we fix it?
All right, we went slightly over there, boss. Slightly over there on the time, but we're watching it. We're working on it. So our next topic is interest rates. So we've all heard about Fed raising interest rates, Canada, US, and more recently, a little bit of a kick the can down the road to March. Nothing yet, but they've been, for lack of a better term, threatening that they're going to raise the interest rates.
Have they not been threatening for about 3 years now?
It's been a while, but 2018 was the last time they moved them a little bit. But yeah, I mean, so in terms of the interest rates, I think the main thing that we want to talk about here is what does that mean for the stock market? What does that mean for debt holders, mortgages, and the debt side of it as well, the mortgage side of it too. So I think if we were to start on the stock side of it here, I'm gonna go like that. So we're just looking at a chart here. What happens after the first rate hike? Stocks do well. So you can see in this chart the date of the first hike. So this goes back to the rate hikes all the way back to 83. How does the S&P 500, which is a good index to use when we're talking about a global, it is a US index, but it's a good global benchmark for how things are around the world. So we like to use that one when we're, looking at some of this data here. So I think what this chart shows is next 3 months after that first hike, a little bit rocky from what we're looking at here. Sometimes it's up, sometimes it's down. But I think what the main thing is to take away from this is that 12 months out after that first rate hike, it gets better. And I think that's the key. That's the key thing there.
You still have to, adjust your quality of life, etc., for those time periods, because historically it does mean it gets absorbed and we move forward. It may be a little uncomfortable, along the way. I always smile when I look at 1987, because that kind of ages me, of that Black Monday date, how the world came to an end, and 12 months later, huh, oh, we're still here. Similar to what happened in 2000 with the
Well, and you
you
can
know,
really see that there,
so
because in the next 6 months after that would have been October 1st, which would have been slightly just before that. So we're up, they're up 20% there. And then
no, I
12
know.
months later, it was only up one. So you kind of see that Black Monday in there.
It's not easy. It's not easy. However, these companies, everything's based on future revenue. Their numbers are still forecasted to go up. So again, back to what CJ's earlier comments were about noise. Don't get trapped by the noise that everything's coming to an end, because it's not.
And I think more so than the hikes is the uncertainty that is around it. The market
Absolutely.
just hates uncertainty. So we're uncertain. Yeah, are they going to raise rates 50 basis points, 25 basis points? Are they going to do it 5 times? They're going to do it 4 times. And, to steal your line, my crystal ball's a little bit foggy.
Mine's clear, actually.
But yours is clear. Okay, perfect. All right. Well, we'll save that. Save it for
The Canadians historically have been more calmer with the 0.25%
Mhm.
increases, multiple times.
But I think
whatever.
once they put it out there, and now businesses, consumers, people, we know now, okay, here's where we're looking
Well,
at.
Yeah, and you know what? Some of this is priced in. So I think
Mhm.
the Feds, I'm more inclined to guess that the Feds might be going at the 50 basis points. They don't want to hit it so many times. They rather hit it a fewer times, but with 50 basis points.
Sure.
And like you said earlier, those increases allow them to have some bullets to use later on if they have to reduce it again. Because right now, there's nothing left. And
Mhm.
inflation is up, and they have nothing
The
that they can do.
negative rates. You could go negative.
No, I don't want to talk
Japan.
about negative rates. Okay, Japan. I don't want to talk about negative rates. I'm just saying it's much easier to have, some stuff in your ammo that we can actually go the other way again.
And if
stimulate
things
we
are
have
going
to.
well, like things are going in the right direction, people that have stimulus checks have gone through, we're not getting that anymore, but people have money, and it is, the numbers do show that on average, it is a positive picture right now. So it could be a good time to raise rates a bit,
right,
get those bullets.
And a lot of stats are coming out with people having money.
Mhm.
They're hoarding money, maybe partly because there's nowhere to spend it.
Can't go
But
on vacation.
they can't.
Yeah.
Cruises and stuff has been postponed, and stuff that they would
Yeah.
normally have spent on. Even a car, there's lack of inventory to buy a car. Right?
You can't get one, so
You can't get one. You want to get one. You have the money to get one, but you can't get one.
And I think we were running out of time there, but quickly, I wanted to mention as well for our clients that are jumping into the housing market, to kind of lead into our next topic too. But with interest rates potentially going up, I wouldn't make any decisions to do something just because interest rates are going to go up, right? Because if you have interest rates go up, you could get a slight cooling there, and it's it's not going to be the end of the world if interest rates get raised 1/4 of a point, and you have to worry about qualifying and the housing prices.
Now you're gonna put me into the corner. If you're worrying about a 1/4% increase, you shouldn't be buying that house in the first place. Okay?
Yeah. So
think of it that way.
Don't rush into it.
That's right.
We've heard some people, getting,
Yeah.
feeling the pressure to get in.
Well, if I don't get in, I'm never going to get in. That's standard. We hear that all the time.
We want to avoid that. So, okay. So yeah, jumping into the housing market.
How do we do on
now.
time wise?
We were 6 or 7 minutes there. So
what more?
We're We're
Wow.
7 minutes. I mean, these are big topics, and
talk less. Anyway, okay, go ahead.
Yeah, okay. So the housing market, jumped into the housing market here. So obviously this has been a huge issue in Canada, and it's talked about all the time. Homeowners are super happy because they've participated in their houses doubling and
massive value increase, equity increase.
Mm-hmm. And so that's been positive for the economy too, because people have money. They're using their lines of credit and stuff like that to be able to renovate and stay in their homes,
stimulating the economy.
And I think in terms of where we think the housing market is going, what factors are driving this moving forward, we have this discussion almost daily,
3 times a day.
So I like to look at the factors that will allow the housing market to continue to go up, and then the factors that are could cool the housing market, or you could see a flattening of the price of houses, or even a downturn, the house prices going down. and kind of balance them all out. What are your thoughts there?
Well, I wish back in, I think it was 1978 in my economics class at Laurier, I wish I listened because clearly,
Inelastic demand.
clearly this supply and demand curve that I remember him telling me, trying to grasp, okay, buddy, I have to admit, being personally, I have changed over the last 3 to 5 years as to just wait till interest rates go up, just wait, and nothing's happened. But it to me personally, it's become very, very obvious that we have the number one problem is we have a supply issue. We are just not producing enough houses. And we put immigration in, when you put people looking for their first homes, the population growth, and CJ has some great numbers on that stuff as well. Clearly, that is our issue. So then the bottom line is, are we fixing that? Well, right now, lots of noise, but I don't see any noise about contractors, builders building more homes right now.
Well, and I read something that 250,000 houses are tabled in Ontario to be built that are approved 2019 and before that haven't broken ground yet. So it's the bureaucracy too is kind of, delaying this whole process as well.
And again, we're obviously talking to you from Guelph, and anybody that's been in this city for a long time clearly sees, what's happened 10, 20 years ago where builders, Thompson and Reed and all these people were building subdivisions everywhere. There's nothing. It's infill, meaning they take down 2 big properties on Gordon Street and replace them with 2 apartment buildings of 10 floors.
Yeah.
And of course that has effects in the future of how you're going to raise your family.
Well, and what we've seen in Guelph too is people from Toronto and they're downsizing, but it's upsizing to Guelph. So we're seeing a lot of
and those
numbers
numbers,
go for
and some
more.
of those numbers have come up at roughly 75% of outside of Guelph real estate agents buying homes in Guelph.
We're gonna fact check that number.
So okay, we better check it. But it's been a big number.
It's
a significant
it's
number.
I mean, on my street alone,
significant.
We've had probably 7 houses that have turned over in the last 18 months, and I think 6 of them have been from people
out of Guelph
in GTA, outside of Guelph, moving in. So
exactly.
I think your number is probably
well. I was going to say 65 or 70, but it looks like because more.
And so, what makes it? This is our argument that we have all the time. What makes it? You got a minute here if we're going to make time, but what makes it? What makes this slow down? What makes this slow down? What makes this turn around the opposite way?
If you go to the perimeter of Guelph and you go out 1 mile and there's acres and acres and acres of vacant land that is qualified agricultural farmland, if the Greenbelt Places to Grow were to expand to that and the builders were allowed to put up 1,000 new homes or whatever it is, it would not solve the problem, but it would definitely slow it down. But I don't see that happening. So I don't know what to say. I think that we just have to keep an eye on it.
The supply has to start matching that population growth. I think the key number is
the federal government. The federal government has authorized 400,000 immigration that come in every year. Where are they going? 65% are going to Ontario, to the Toronto area.
Yeah.
But you just finished saying they're not building any houses. Where are these people living?
Yeah. And I mean, the other, we just ran out, but the other factor here too, that we've seen a lot of clients kind of get into the rental property game, and that's been good. But we're seeing a lot of people, they have equity in their homes. They say, I'm going to buy another house and then keep that house as a rental, which takes it off the market.
It's not part of supply anymore. It's
for
part
somebody
of the rental
to buy.
supply.
It's part of the rental for people to rent. But when we're talking homeowners,
and that's happening way more than we think. Way more, because even us talking to clients about having multiple properties,
that housing supply shrinks even further when they get off the market, and those are probably long term, investments and that. So we're into the Super Bowl now.
Finally,
got the Super. Oh yeah, get your glasses on here.
Finally.
Jerry made all his notes for our Super Bowl conversation.
No, it's not Super Bowl. Go ahead.
No, so the Super Bowl's coming up. Jerry and I are big football fans, and so obviously we've been watching the playoffs, watching how everything's been shaken out on there, and I think We got the Bengals in there, and
And the
the
Rams,
Rams,
obviously.
and it's nice to see Matt Stafford in there. He toughed it out in Detroit.
10
for,
years, 11 years of torture.
cold in Detroit
Torture.
there. So now he's in LA and he made it. So good for him. That's exciting. And then the Bengals. Shout out to my father-in-law. He's had the Bengals every year. I've been with my wife for 15 years. He's had the Bengals for 15 years. I think they've won one playoff game or maybe two, and he takes them every year in the first round. So
like 30 years or something. It's 31 years.
He might have finally made some of his money back here with the Bengals this year. But yeah, it's nice. It's going to be interesting to see how LA's playing at home. So,
but that's by luck. That's not a.
mm-hmm.
It just happened to be. And the same thing happened to Tampa last year, right? So,
and the one thing, maybe not so football related, but that is frustrating to see, is the fans in the stands there. You see, you wonder how they can make it work. We can't make it work. Whatever it is, it's just you see these 90,000 people gathering.
That's another topic at another
there
time.
You go.
Okay,
all right, yeah.
So you're trying to tell me my Leafs are playing an empty stadium?
Exactly. I mean, we got to watch the Leafs.
That would be another podcast at another time.
Exactly. Okay? The Leafs are playing an empty
but
stadium.
Just to summarize quickly for the Super Bowl, I do watch football all the time. I probably doesn't mean I know much more, but I obviously watch enough. Stafford is Stafford. We know about him from Detroit. This kid Joe Burrows, I thought the Rams would win the Super Bowl in Week 10 because they just had the best team.
You didn't tell anybody, but
I did.
Thought that.
I did actually tell everybody.
Okay.
Because I thought they had the best team, not individual players.
See, next year we'll have the podcast so we can.
Excuse me,
these.
But Joe Burrows,
mm-hmm.
This kid has played in 7 high pressure games in college and 3 playoff games. He hasn't lost. So you can't just shrug him off. I think that when the dust settles here, that they have a legitimate shot here at upsetting, winning it.
He's played in plenty of big games. So
he's played in 90,000 in college, four huge bowl games,
mm-hmm.
and he won all 4 of them. Yeah. And now he's played 3 playoff games in the NFL, and he won them.
Found a way to win, yeah.
Exactly. So, but anyway, let's get to the most serious part, okay?
Well, how could we talk about football, Jerry,
Go ahead,
mentioning... By the way, to preface this comment, I'm a Dallas Cowboys fan. Jerry's a Miami Dolphins
fan.
And so neither of us are fans necessarily, but you have to respect the greatness and acknowledge the retirement of TB12, Tom Brady. What a career. Absolutely remarkable. He's on the Mount Rushmore of
I'm going to allow
greatest
CJ,
of all time.
I'm going to allow CJ to continue his
I know
his
Jerry has
raving.
a lot to say, and we got 2 minutes, and we still got to talk about betting apps. But
I'm going to let him finish, and then I have my little points here. I tried to
my only Tom Brady stat. This is my favorite one, and I
Okay.
don't know if this one has been affected by the fact he didn't make the Super Bowl this year. But heading into this past season, Tom Brady, there was a better chance that Tom Brady was going to make the Super Bowl, was going to make it to the Super Bowl, than Steph Curry was going to make a basket in an NBA game,
and
that is Steph Curry is one of the goes down in history as the best shooter, which is crazy.
So Brady was 7 for 21, which is 33%
for Super Bowl wins, but he was 11 for 21.
He entered 10, I think it is. He lost 3, won 7, I think. Anyway.
Yeah.
Anyway, are you finished with your patting on the back?
Go ahead,
Tom Brady.
You got 60 seconds.
No, I gotta have more than 60 seconds here okay. So Tom Brady just announced his retirement, folks, and he no doubt
he prepared a speech.
He no doubt receives a lot of praise for his long, successful career. He did win 7 Super Bowls in 22 years. No one is even close. So how do we look at this? Should he be looked at differently than Barry Bonds, Lance Armstrong, Roger Clemens, Houston Astros, even Pete Rose? I don't know. When you mention Tom Brady, you also have to mention the New England Patriots, and they are both convicted cheaters. Let's take a look at the facts. Because my colleague CJ, my colleague CJ likes facts. I'm going to throw the first one out in 1982, which was before his time. It was called the Snowplow Gate. Anybody my age remembers Brady was not part of this, so don't put blame on Brady here. The Patriots in this snow blizzard.
10 seconds.
Some guy came out with a snowplow, cleaned a path, and they kicked an overtime field goal and won 3-0. So, and that became a big thing. 2001, Tuck
We're only
Gate.
in 2001.
Now I'm going to go to Brady. I'm just going to go to Brady.
Okay.
2001, the Tuck Gate rule. Brady clearly fumbled the ball in a divisional game against the Raiders. Everybody complained about it. The NFL called it a tuck rule. It took them about 10 years to realize they made a mistake. Brady ended up winning his first Super Bowl when the game was over on that one. So that was the start of
10 years later.
So congratulations, Tom Brady, with an asterisk. Remember, deserve ain't got nothing to do with it. Okay.
That was.
I was so looking
I
forward
have
to
a
that.
good idea for the editing crew on that, so we'll be able to get
Oh,
through
yeah. I
that.
can just
So-
imagine what's going to happen. Okay.
All right, on to the last topic here. And so we wanted to talk about a few things that we're watching, and I don't know if we call them recommendations, but a few things we're watching, reading, and we're finding value. And so one of the the shows for me, I watched the latest season of Ozark, and you're behind on that
I
stuff.
haven't seen it yet, so don't tell
Classic show. I mean,
Don't
gives
give
a
me
bit
the
of a bad rap to financial advisors, but good show. And this season didn't disappoint. I think it's a two-parter. So
It was highly entertaining. The first three, or whatever it was.
the first 7 episodes, no spoilers, but the 7th one ends where it can't end like that. So there's another 7 coming up.
Oh, so that what you're saying about right now?
Yeah, there's another 7 coming up. So yeah, and on top of that, the other thing that I really have enjoyed is this book, Never Split the Difference by Chris Voss. He's an famous FBI negotiator. And he just talks about negotiation tactics and the art of negotiation. He actually has a master class, which is a
Negotiation
an app.
means somebody who gets kidnapped or
He's
or heist.
so
Or,
that's how he started. He
Okay.
started by negotiating with terrorists and bank robbers and hostage
hostage
situations,
Okay.
that kind of stuff. And then now since he's retired, he's taken what he learned doing that and some of the things that him when he's working with the FBI built on, and the tactics that they would use, and he's kind of made them for everyday life, for when you're talking with your spouse, when you're talking with your kids, when you're talking with your boss, we're talking with
So
clients.
it's not directly.
So
it's not criminal related stuff.
No, it's
everyday
all
life.
stuff. It's about how you can mirror what somebody says to empathize
Yeah.
with them, label how they're feeling
Well, that's pretty
to
neat.
make them feel heard. And
It's an easy read. Like you can.
It was an easy read. I was into it, and he gives 3. He says there's 3 different types of personalities, and when I was reading it, I could see which personality quite
You were?
clearly that I was, and I could see quite clearly what kind of personality my wife was as well, Jess. And so it was really cool. I read it to her, and I said, does it sound like you or me? And
She agreed?
She agreed on both of them. And so it does give you some tips on, how to approach people with that personality. Like the golden rule is always treat others. This is what he says: treat others as you would like to be treated.
That's been around for 100 years.
And he's adapted that to say, treat others like they need to be treated, which is, by recognizing what kind of personality they have and adapting your treatment of them.
You realize that's a subcontext of Philotimo, right? Like it's
Exactly.
that, right? Okay,
yeah, there
good.
you go. So
Good.
we're tying it all together.
Good.
What do you
Okay,
watching?
what I'm going to say is I watch lots of movies, and I watch not the regular movies. I do watch those too, but 2 movies that I'm going to highly recommend. One is called Away from Her, and it's actually a Canadian movie starring Julie Christie, Gordon Pinsett, and if you see him, you'll know exactly who he is. Olympia Dukakis, people know who she is. Julie was nominated for an Academy Award, and she won the Golden Globe in this performance. This is an extremely powerful movie about dementia. It's a soft spot for me because my dad's in a nursing home with dementia, but anyone over the age of 50 or 60 with a loved one who is aging, parent, grandparent, will no doubt feel a bit of sadness if they see this movie. And the storyline, it's about an absolute, incredibly wonderful marriage of an aging couple. And then the wife of some 50 years starts to be a little forgetful and decides to admit herself into long-term care facility because at the start of her dementia, to basically save her husband the agony of having to look after her. And of course, the husband disapproval, absolutely not.
Mhm.
But he finally agrees with her because she's adamant she's going to do it. So when he brings her to the home says, don't worry, we'll take care of your wife, but for 30 days, there's no visits. We just need her to get established here, etc. So basically, all I'm going to tell you without giving you away the story is after 30 days, he begins his daily visits. It is a movie that every single person, I'm serious, should see. Like it's a phenomenal performance. That's my one.
Yeah.
The other one is a recent one that I by fluke. It's called Last Full Measure. These are on Netflix, by the way. They're both on Netflix.
They are on Netflix? Okay.
Netflix.
Yeah, okay. Yeah.
Last Full Measure. It has a phenomenal cast. So when you read the cast and it says Christopher Plummer, William Hurt, Ed Harris, Samuel L. Jackson, Peter Fonda. What the heck's going on? Like, how can all these people be in the same movie? Well, this movie is based on real life events, and the cinematography is amazing and brings us back from a Vietnam War to the present 35 years later. It just goes back and forth. It is a war movie, but it's not really a war movie. So it's basically about a soldier that saved 60 soldiers while they were in Vietnam, but was not given the nation's highest honor of valor, the Purple's Heart. They gave him these other awards. It follows the timeline of 30 years after his death, where Airman William Pitzenberger is finally awarded for what he did through the lives of these people that he saved. I was mesmerized. It was just one of those really, really powerfully good movies. So again, it's not action-filled. It's not a murder mystery. My wife Jane says everybody should be watching Murdoch Mysteries because we see all kinds of stuff. Guelph, Cambridge.
It's filmed in Guelph. Yeah.
It's unbelievable.
Mysteries.
She makes sure she wanted me to say that. But if you guys get a chance, anybody listening to this who's my age, I'm just over 60, but even if you're 50, away from her, please take the time to watch it. Very powerful.
Well, and a lot of people can, resonate with family and stuff.
They have somebody, right?
Yeah.
And dementia is one of those things that we can talk about that forever, but it's one of those cruel diseases that we got to address.
Yeah. Well, that one's in the books. So we had some interesting topics today and some good conversation. And we're
I fully expect editing. So all my great lines, I suspect, may be removed when I finally hear the final version.
Well, it's up to the
this.
editor. We're going to have to leave it up to them. So.
Who's the editor? Sorry, who was the editor?
Yeah, well, it's me right now.
Okay, good.
Okay, so.
Folks, thank you very much for tuning in.
Thanks very much for tuning in.
We're going to get this better and better. And thanks again.
Yeah, keep it going. Yeah, sounds good. All right, so that's it.